Welcome to Teague Talks. Today we're sitting down with Eric Jacobs, Chief Global Growth Officer at Aimbridge Hospitality. As everybody knows, Aimbridge is the largest management company in the United States. Eric's job is to take them globally. We'll see how that's going. They see a lot of hotels. They get a lot of stats and data. Hoping he could share some of that with us. And maybe we can even get him to talk about his favorite markets or two. Thanks for joining. Eric, thanks for joining me today. Great seeing you at Alice, by the way. And thanks for sitting down with me. This is going to be a good conversation. Thank you for the time, Eric. I'm glad we're doing this.
Well, it's good. It was good to see you last week, and it's good to chat just post the conference and getting everybody's outlooks. But listen, it's it's been an adventure. I've been here 19 months. Coming from Marriott International, joining Craig and Steve Joyce here at the company to kind of restructure. Refocus the company with a new ownership group, new strategy. We've got a great balance sheet, and so ways to really focus on growth. And I guess the best thing or the message out, I think the 20 to 24 period with the previous ownership and leadership group, it was really focused on being the biggest. And I'd say today we're focused on being the best. And our ownership and our board specifically has challenged us to grow a company in a way that's built to last, built on quality operations, built on quality growth. And that's what we're focused on, both here in North America as well as internationally. And if I have my way, globally.
Eric, you're fantastic. You're like Kristen said, I don't have to ask you questions. You just go and answer all the questions.
But compared to Chris, I'm good.
yeah, the GOAT of the industry. All right, wait. So remind me. I got a bunch of thousand questions right now. One, remind us all who's the current ownership of Aimbridge, because I know it's changed hands a bunch of times.
Well, so we have an ownership group. It's primarily owned by three large equity firms: KKR, Capital Group, and Arbor Lane. Those are the three big ones. But I think what they've done for us, looking back to the previous leadership, is they really they're treating us like a public company. They set up a proper board, really a board of industry veterans, lots of diversity. And so with the ownership group saying, build a proper company, the board really being engaged, when we need them at the right time for counsel and direction. It's just been a really good 7 months since the restructuring. And we just feel like we've set the tone for who we're going to be going forward, not what we were in the past. No disrespect to the past at all. We learned a lot. You always want to look in the rear view mirror, but then, stay focused on where you're going. And so lots of lessons learned, lots of great history, lots of great talent that came from, the companies, and we're just focused on the future, and that's where the board and the owners really want us to stay focused on.
All right, Global Growth Officer, give us some of your global perspectives.
So as the franchising business is being built, not just here in North America, and they're going more global, the strategy is a little bit, go build your hub in the major city, and when you start to franchise, that's when third-party management starts. So Craig and I and the board believe that there's a sub-industry within our industry that could actually grow at a faster rate, which is why, the third-party space is so exciting. And when Craig first got here and he went to go meet with the different CEOs, all of them told us, we need a strong Aimbridge. You're big and you're broad and you're in 25 countries at the time. And we need you to go to other places because we're going to even press more franchising internationally. So with Craig's background of, spending the majority of his career in the international markets, particularly in LATAM, Asia, and such, we know the opportunity that exists there. And there's not a very, much like it was here in the late 80s and the early 90s, it wasn't a big, sophisticated third-party management space. So as we're looking at the rest of the globe, we're saying, where is it taking off and where can we play? And so we need to be smart about where we do it, but that's to be honest with you, that's the exciting part for me. It's like, I get to go play across all the different brands. And then how do we help owners grow their portfolios and get the most value out of those brands? I like to say we work for the owners, but we partner with the brands. And that's been a big piece of our change and focus, is making sure we align with the brands in terms of what we deliver at the property level, while we need to make sure we're making the owners, top line expectations and bottom line, NOIs and things, creating the value. But we need to do it with the use of the brands. That's what Aimbridge brings to the table. Our experience across, everything, we manage across 85 brands today, maybe 86, with the new brands that the other brands are launching. We're partnering with them to launch some of these new brands. And so, that experience is what we bring to the table. And as they take these brands more globally, that's the place that we really believe we can play in these international markets. So you're going to continue to see us grow there. And as you know, late last year, we launched an all-inclusive focus. Listen, and whether we were a precursor to the Playa Hyatt transaction, Playa was probably the most active third-party operator in the space, true third party, even though they had their own portfolio as well. And with them out of the market, we entered at absolutely the right time. And so we have a great pipeline of opportunities. We've already opened 3 hotels. We've got a pipeline of about another half dozen right behind it. We're negotiating more. And we just think that's going to be a really niche for us as the global brands have gotten more involved in the all-inclusive. The all-inclusive isn't new, but when you got Hyatt, Marriott, Hilton, playing in this space, bringing those rewards customers who are looking for more experiences and a way to cash in those points, all-inclusive is only going to grow. So we think that's going to be a big piece of our growth platform going forward as well.
My brain goes to your size and how you can use your size, right? So from my perspective, like not everybody can manage for Blackstone, right, in their scale. And the Brookfields and the Starwood Capitals of the world and the scale that they really bring and the reporting structures and what they need to that level. And I think you guys have done an amazing job at that.
But we're not done, and we're not satisfied. I will tell you that. So we still got a lot of stuff working to bring that. We kind of have 4 pillars in our company. So
let's hear it.
Just quickly, we don't want to be the biggest. We want to be the most trusted partner. That's where we are today. And with that, we've got to bring best talent. At the end of the day, starts with the GMs and our ops people. If you got a great GM, you're 90% there, right? So bringing best talent to the to the industry. And as the industry, even when I started, Craig, he said, I go work for Marriott and I can grow my way up through operations. As they're pulling further away from that, an Aimbridge becomes that player. Like, see, we should give people can start as a housekeeper and grow into a GM that can grow into a regional. We want to be that player. And so bringing best talent, operational excellence, that's kind of like, that's the minimum. We just have to be better than everybody else when it comes to driving that performance. And then you mentioned it, leveraging our scale. What are we doing from a scale perspective, whether it's partnerships with the brands, leveraging back office and having a backbone of accounting and revenue management and systems that can provide the best of class resources at a better value. I mean, that's where the scale value comes in. We have global and national sales offices. I don't know how many third-party companies have that today. We have thousands of salespeople across North America or the different regions because of the number of hotels. We have programs, we call them Boomerang. If you work at one hotel and your group is leaving and like, hey, stay at one of our other hotels, go to this hotel. We're incentivizing within the ecosystem to move business around. That's the scale value that we can bring to the table to drive more value for owners.
Yeah, and at the risk of giving you a commercial too late, I've been to the Aimbridge mothership and the home office, and that one of the most impressive things to me was the sort of 24/7 internet response team, for lack of a better term. If something happens at any time of day at any of the properties, there's somebody there. It's a super cool digital, I don't know, looks like an ESPN.
We listen, when we manage across 85 brands, we have access to a lot of data. Marriott's got their data, Hilton's got their data, but because we can see across all the different brands and the trends and the, things, we've built an ecosystem that brings that all to bear. And then managing across all the different brands, we can do our own benchmarking, whether it's labor or productivity and things like that. The team here is very sophisticated. We still have a lot of work to do, and I'm sure AI will enter this conversation at some point, but what does that do to even accelerate that, both for us and for the industry? And then, I think we've been told by most of the brands we have bar none the best, call it, security. So, safety and security as it relates to data and data management is really, really important to us. And that gives us, kind of the respect with the brands and things like that, because we know they're at risk as well.
You talk about the data. That's part of that's part of why I wanted to have you on. Like, what are you seeing? What trends are you seeing out there? Again, you guys have so much visibility. Tell us what you're seeing. Educate us.
Well, I mean, listen, I don't know that there's anything magical. I mean, costs just continue to creep up. That's a challenge for all of us. I think we all know, if you ask any owner today, their revenue's better than it was in 19, but the NOI is not. And so the cost creep the inflation's been tough on our owners and investors. Group continues to be strong. Our airline partners say business travel is still very consistent and even seeing an uptick. Leisure continues to be very, very strong. And I think we all wonder out loud, with some of the tax benefits and things that people will be receiving, will they spend that money for experiences and take their family out and things like that. Booking windows are short. I think that's one of the biggest challenges for us as an industry is, when you're managing for some of the publicly traded and the private, like getting the forecast right, whether it's good or bad or up or down. They just want, they want it to be in some level. And that's been probably the hardest thing to really predict with the short booking window that we've seen. But, it's a market by market conversation. San Francisco is up 12%. But, I remember after 2008 financial crisis, and RevPAR's dropped by, let's call it like 20%. And in 2010, we're like, hey, we're up 12%. And Mr. Marin said, yeah, but you fell 20%. So just remind yourself where you are. But San Francisco is great. We need that city to come back. We need that region to come back. There's it's a world-class city. We knew it would come back at some point. But, each market is still, I think you hear from owners, it depends on where you're talking about, whether you see growth, shrinkage, is it stable? So listen, by and large, just to kind of say, we are bullish about 26. We think we'll outperform the market. We feel like we're strong on the group side, strong on the top line. We think we'll outperform what we heard. And it was a little mixed last week. We heard some, a little more doom and gloom from some and more positivity. I think we're leaning more towards the positive. And, I think there's some question marks about World Cup. And I think that's related just to travel visas and will people come and things like that, where they feel welcome in the country. Again, these are world events. I think people show up. And so we're expecting that the World Cup will have, value for the markets that they're playing in. I also learned this too. Just because, let's say, Germany's playing in Houston, that doesn't mean that's where they're practicing. So, like in the case of Germany, I think they chose to go somewhere like, I think it was like Wake Forest. So Wake Forest, that area is going to see a little bit of pop of travelers that maybe you didn't expect, because, Germany was going to go play in Houston. And so that's one of the learnings about World Cup, is that the demand may be spread out, beyond the major markets that were hosting the games. I just thought that was an interesting insight from last week.
Wait, tricky question, but keep talking markets. You started. Give me some other winners and losers. Your predictions.
I think LA will continue to be challenged. I just think they've got things to fix. San Diego continues. I think San Diego is one of those places that's a little flat right now. Unintended consequences of changes in the government for a moment has taken some of that government demand out of that market, just because of the changes, what's happening at the border. New York continues to be strong. Boston continues to be on the upswing, I believe, and a good market. It's the secondary markets that seem to start to come on as well. On a personal note, I still like, some of the markets that have the mix of leisure and corporate. San Diego's a great example. The Orlando's, the Miami's, where there's a high leisure and high corporate business mix. Those are the ones that I think, because they're a little more balanced in their demand, will continue to grow. Bay Area's getting there, but we need San Francisco. Still like Seattle too. I think that's in a better place and going in the right place. The interesting one last week was Portland. You had a lot of people say it hasn't hit the bottom, and you have others who said, now's the time to get into a place like Portland. Chicago, sitting in the middle, always has. It's always been a good, steady market, but I don't think you're going to see high growth. I'm hitting the major markets. And then Dallas, Houston, Texas continues to be strong. And you still hear more and more corporate moving here, which is great, particularly in the area where our offices are, in the Plano legacy area, more corporate demand moving in. Those are all good signs for the broader Dallas market.
God, that was super. That's exactly what I wanted, Eric. That was great. That was great.
Eric's
That was
predictions.
keep going globally. You're seeing globally. Like, do you think you can make some headway there? Like, what's going to happen globally?
Yeah, I mean, listen, internationally, again, subject to some of the geopolitical challenges that we might be having today in terms of, how people feel about us and such. But, Mexico's been very, very strong. Maybe in some cases, Canada skipped over us and went down further south of the border this past year. I think Mexico saw, really strong demand. U.S. travelers love Mexico and Latin America. So I think that South America, hard to predict with some of the changes there and the challenges they have going on there. The Middle East, I think, continues. It's fascinating to watch what's happening. Dubai is Dubai and continues to grow at a massive rate. For those who you want to follow an interesting new market, watch what's happening in Saudi Arabia. It is very, very interesting as they prepare to, in maybe some ways, come into their own. I mean, the Crown Prince had a vision in 2015 with the 2030 World Expo as the target, and that's going to happen. And they're building an enormous amount of infrastructure and leisure out on the Red Sea or even in Riyadh. I mean, I was at a project recently in the west side of Riyadh. There were 42 hotels under construction. I couldn't count the number of cranes that were going on. So, when you think about what's happened in Dubai and Abu Dhabi and places like that, in some ways the kingdom is saying, hey, I'd like to diversify my economy as well, provide jobs and growth. And, it's interesting, their populations, 60% is under the age of 55. It's a very young population looking to have, a diversification in their economy to provide new opportunities, business growth, things like that. It's a market we should keep our eyes on. I think it's going to be a very interesting time to watch another country in the Middle East open itself to the rest of the world. And I think the resources that they have in that country, in some ways, somebody described the north, I think it's the northwest side of Saudi Arabia. They have an area, I'll never pronounce it properly, but I think it's called Alua or Alula. And they liken it to Disneyland at Disney World, as Petra is Disneyland, to what the resources and the history that exist in that part of the country. When they open that up to the rest of the world, there's a lot of opportunity to go and explore and see new things that have been kind of hidden away for years. So I've been there a few times. It's pretty exciting. I'm not saying we should all rush over there and build hotels yet. Yeah, maybe they're making their switch today from public investment to private investment. I'm just saying it's a market that's exciting to watch come into its own, much like we've watched Dubai over the last 25 years.
I totally agree. Eric, this is fantastic. So wrapping up, just looking at 26, I like hearing that you're positive. I'm an optimist as well, so are you. So even though we're hearing negative stuff, and maybe we talk about Alice again, but we're hearing negative stuff at Alice, all the pundits, STR, Blackstone, all the Wall Street guys are pretty negative on the space, right? They all love ultra luxury today. They're all in love with that, and bearish on everything else. And I'm just not that. Me and the actual operators, owner operators, Main Street people are actually more positive than that. It's just hard, and
It is.
they don't want to do it anymore. So one, I think that's a benefit to you. They're turning it over. So the third party business is very active at the moment. People looking for solutions.
There's just some things in our industry that continue to be headwinds that we need to continue to rebuild. Best talent, great place to build a career, travel and all those other good things that make our industry so great and so entrepreneurial. This is why we all got into this business, right? It's a blast.
But I do think you hit on something. We need to rebuild that bench strength to rebuild our industry. We got to somebody's got to take that ball. We got to spend a bunch of time and energy.
We're all in it together in that case.
Correct.
Like making the hospitality industry a place to build not just to have a job, but to build a career. It's one of the things that we talk about a lot at this company. I know the brand companies are doing the same. It is an amazing industry. And I always like, somebody says, well, what's going to happen to it? I say, well, I could just tell you two things. One, somebody's been looking for rooms since Jesus' time. That's A. All right. And two, if we didn't get wiped out during the pandemic, our industry is going to be around forever. So there's always going to be somebody looking for a place to stay because the sun goes down everywhere in the world. So there's always going to be a need for the hospitality industry. There are going to be bumps and bruises and ups and downs, but I think long term we're going to be fine. We just got to stay and stick to the principles. Stick to, we have to be nimble enough too. We got a lot coming our way as it relates to AI and what it can do for us as an industry in terms of, better forecasting, better labor management, those back office tools that frees up time for GMs and associates to truly be, hoteliers and get back to the hospitality and create the personalization that consumers are looking for. That's what I'm excited about, the whole AI thing. And we're investing a lot of time being disciplined and investment, both people and money, because this thing's coming whether anybody likes it or not. And, we got to have the best of class tools. And so we're investing in that today. That's part of what we can do with our size and scale. We can't move fast enough, and the industry is going to be very challenged, I think, when you look at how do the brands sell their rooms, how do the OTAs sell their rooms, and it's going to be, how are you going to buy in the future and for all of us? And so that's going to change the landscape very, very quickly over the next couple of years. And I think if we're not ready for it, those who are leaning in are going to get ahead for sure.
Yeah, it's funny. We think we're insulated from that because we're a brick and mortar and operations business and et cetera. And we are not. AI is going to get us all.
It is one way, shape, or form. But again, as long as we're using it in the places that create, better intelligence, better forecasting, I think revenue management's always been a big piece of our industry. I think we're just going to be even smarter and more intelligent in terms of rate and revenue management. As the consumer, it's going to be harder for us to buy those cheap rooms.
It's coming. I love it. All right, Eric, you're fantastic. You're a wealth of knowledge. I love having you on. Thanks for coming to share all this with us. And thank you for the time.
Thank you.
And I'll see you. I'll see you in March at our conference.
Sounds good. Look forward to it. Appreciate it. Always fun to do.